please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Cues this morning are quite mixed. That's the SGX Nifty, indicating a flat start for now. Ashwani Gujral, Sudarshan Sukhani and Mitesh Thakkar now join us. Good morning, gentlemen. Ashwani, if it opens flat, does it give a fresh entry for shorts, or you think there's been enough shorting now and today could be about covering?
Well, good morning. I don't think this is a great bear market, so every day coming into short is not the best plan. It's clear from yesterday's action that there is stuff that is going up also, which is FMCG, consumer. Yes, financials are underperforming and they could do that for a bit, but it's not likely that you'll get day-on-day declines. For the moment, buy on declines on FMCG and consumer, and sell on rallies on the financials. But it has to be sell on rally and buy on decline. If you just sell and buy anywhere, I don't think you'll do too well in these sort of markets.
Okay, Ashwani, hi, morning. Just to follow up, we were discussing yesterday as to what the impact would be because of the way global cues are shaping up. This morning, things are worse. I mean, crude has moved up higher, bond yields have moved up higher, the dollar has strengthened. How much long before, it plays catch up and sort of takes our market down?
But the rest of the markets are going up. When the US bond yield is up, US should go down. So, markets have their own way of dealing with things, and right now they are choosing all over the world not to react to these cues. So, financials, etc. will underperform a bit, consumers will outperform, but basically, choppiness should be the order of the day. And I don't think there'll be major declines and you'll lose 500 points on the Nifty. I don't think that sort of a scenario is really quite there.
Choppiness was the order of the day yesterday. Let's also bring in Sudarshan into the conversation. Good morning, Sudarshan. So I remember before Karnataka, you had a slightly more optimistic bent of mind. But looking at the last 2 days' action, what's the call for today?
Yeah, good morning. Well, on day after tomorrow, day before yesterday, which is on Tuesday, when the results came and prices rallied all the way to 10,930 and then retreated back, that was the first sign that perhaps this up move is facing resistance at that 10,930 mark, and it is now for the bulls to prove that they can take the market higher by crossing that benchmark, by crossing that, say, stream or creek or whatever. So the view is that this market is facing resistance, has probably made an intermediate top at 10,930. Now a top is not made in a day, which means Nifty will keep on going up and down and become choppy. But the June series, which is what we are now looking at, should be weaker. I'm looking at an immediate decline towards 600 in May and probably lower levels in June. So all said and done, we'll be choppy, but the bearish bias should now kick in.
Okay, bearish bias should kick in. Mitesh, good morning. Your trade on the Nifty and the Bank Nifty?
Good morning. I think since yesterday with the gap down, and while the gap did get filled during the day, I think the intraday charts have at least had some kind of a mild breakdown with volatility indicators rising on the intraday charts, not on the daily charts, which means that markets would be choppy within a range, but with a mild negative bias. So my sense is that we could have possibly over the next few days a 100-120 point kind of decline, test levels close to about 10,650, 630 amidst some kind of strong volatility which could happen on the intraday chart. So I would possibly use this market to go short if I'm trading with a 2-3 day, 4 day kind of perspective on intraday bounces, while anything close to about 10,670, 660 and around those levels, once we reach them, I think then I'll be exploring more on the long side. So I'm not looking at a big decline, but some kind of a choppy correction over the next few days.
Okay, so a choppy correction, no major decline, but volatility definitely. Ashwani, what are you looking at in terms of individual stocks today?
See, I think FMCG is showing great amounts of momentum, and after a long time. So that way, getting into these stocks even now is not such a bad idea. HUL is a buy with a stop of 1550, target of 1625. Colgate Palmolive has had two very big days. There could be follow through. That's a buy with a stop of 1160, target of 1220. Escorts is a buy with a stop of 950, target of 975. Bank of Baroda is a sell with a stop of 136, target of 124. And RIL is a sell with a stop of 962, target of 940.
Okay, Ashwani, sorry, just a word on the Bank Nifty trade. Is there any for the expiry?
See, Bank Nifty again, if we start rallying towards 26,300 thereabouts on the Bank Nifty futures, that would be a decent trade on the downside. Overall, whenever the market goes down, it will be taken down by financials. When it goes up, it will be taken up by FMCG and consumer.
Okay, Sudarshan, let me come to you. Stock ideas then?
Well, the stock ideas are primarily on the bearish side in financials. Max Financial has been falling relentlessly day after day and doesn't stop. So there is an intraday short selling trade there. Similarly, Indiabulls Housing Finance has probably made a small top when that minor rally came up. That top is going to be in place, and like other NBFCs, it's also now willing to go lower. That's another short sell. The third short sell is not financials, but it's from the mid-cap segment, Century Textiles, where repeated attempts to break out on the upside are failing. So there is strong resistance on the upside, and a correction is imminent in this stock. So the theme is NBFCs are weak, private banks are not doing much, public sector banks are weak, mid-caps are also now slowly facing resistance. Let's see how markets pan out, but as I did say that I'm a little bearish. But two stocks to buy, one is UBL, United Breweries, part of that consumer durables, consumer FMCG sector. As Ashwani rightly said, that sector should do well in spite of the market decline, which means it should outperform. And second buying idea is Tech Mahindra. The IT stocks have been in a narrow range. Possibly they can break on the upside at least for a few days. So there is a buying option there in Tech Mahindra. Broadly a choppy market.
Okay. Well, Mitesh, generally the thumb rule is not to buy any stock ahead of earnings on that day. Bajaj Finance comes out with its numbers today, but you do have that on your list. Do you expect the stock to move up higher irrespective of which way the earnings head? And what else are you looking at?
So typically you're right. I think, we also avoid events or, taking a position going into an event. But I thought that looking at this chart and the way the intraday chart was shaping up, there's a stronger possibility of an up move happening. So keeping that in mind, I was inclined to take this as one of the trades. That's a buy with a stop at 18.99. So you're taking about 1% kind of a risk and look for targets of 19.55 to begin with. The other calls which I have a sell on Titan with a stop at 9.52 for targets of 8.90. Apollo Tyres has had a good session yesterday. The intraday charts are positive, so that's a buy with a stop below 287.5 for targets of 305. Colgate is something which is showing a very, very strong short to medium to long term charts. I believe that this stock over the next few weeks, few months will do extremely well. So that's a positional buy to begin with. I will start with a stop at 11.47, look for a first target of 12.50. And one more sell on Bank of Baroda where the short-term charts are negative. Sell around 134, keep a stop at 138.5, look for targets of 125.
Okay, fair enough. Sudarshan, you have Tech Mahindra on your list. Any other IT name that you would want to buy or sell?
Well, yes, even Infosys and TCS are in the same league, which means there is intraday buying possible in both these stocks. The one stock to avoid is HCL Tech, which is doing something very different. Mid-cap IT is again in part of that focus, KPIT, even Mindtree. So the entire sector is in a trading range and could be willing to break out.
Okay, we actually, gentlemen, thank you so much for your picks. We'll keep coming back to you. We have two big metal earnings to focus on. So let's straight away take it to Tarang Bhanushali, who's joining in. Big numbers coming in from Tata Steel. There, the India performance looked quite okay, and JSW was the real highlight. Tarang, I'm going to actually start with JSW. Given how strong the performance has been and how the stock has rallied, do you think a lot of it is baked in, or does this provide further headroom?
Well, to some extent, yes, the valuations of JSW are superior to what we have seen for the rest of the steel players like Tata Steel and SAIL. So it is at a premium to its peers. So somewhere I believe that the upside from here on would be lower in JSW compared to the peers in the same set.
Okay, I'll come back to your recommendation on JSW as well, Tarang. But before that, what about Tata Steel? This India business EBITDA per ton of almost 16,000 rupees. You think it's something that is sustainable? And what would your view be on the stock?
Well, I think, yes, to some extent, this business can be, the margin will be higher. In fact, in Q1, if we see steel prices have started moving from the end of December and then moved sharply in March. So the impact of the price hikes of March will be felt in Q1 of FY19, and in the first 2 months also we have seen steel prices moving upward. So we will see a blended realization of almost 2,500 to 3,000 increase on an average basis in the standalone entity. Whereas cost for them, coking coal will increase by $15 to $20. That is what the increase will be, and there would be not much on the other expenditure which the company had witnessed this quarter. So overall, the margins will be higher in Q1. And I believe that, yes, the stock is very well poised to move upwards.
Tarang, just, same sort of question on JSW. This blockbuster number of almost 12,000, on the EBITDA. Do you see that sustaining? And the second part of the question is that this is one company that hasn't been successful so far in these IBC cases. Is that a risk if JSW going forward puts an aggressive bid for a steel asset?
Well, on the margin front, the numbers were aided by one-offs of previous quarter GST incentives, so that led to the sharp increase in EBITDA. If we normalize the impact, then the outperformance is just 5 to 6% on the EBITDA per ton level. On the aggressiveness, well, the company has stated that since the stress asset resolution is taking time, so they have now announced a big capex going forward, wherein they would be increasing the steel capacity by 6.7. So now they are looking at their own expansion and not any acquisition going forward.
Okay, so finally then, between JSW Steel and Tata Steel, what's your top bet now? And anything else in the metal space that you like?
Well, we have a buy recommendation on Tata Steel with a target price of 835. On JSW, we are an accumulate rating with a target price of 365.
And on JSW, I just wanted one more follow-up. The management believes that this 11,000 rupees EBITDA per ton is something that can hold. Do you agree? And because they have this huge capex plan, on board, $7 billion or so, you think their earnings could substantially improve over the next few quarters?
Well, the impact of the capex would be largely felt from FY21. Most of the capacities would come in FY21. So till FY20, the volume growth is largely flat. Whatever the margin expansion would come from higher value-added products and lower cost. So again, margin expansion, yes, I think somewhere 11,000 can be achieved on a yearly basis, since steel prices have been quite good, and JSW would be benefited from the captive iron ore mining they would be starting this year. So overall, I think margins can be sustained at these levels for JSW.
Tarang, finally, since we have you here with us, what do you think of Hindalco yesterday? And for a portfolio, if you were to pick a metal stock, which one do you think would make maximum money? I'm talking about the large ones.
So again, Hindalco numbers were marginally above our estimate. The outperformance in aluminum business was curtailed by the underperformance in copper. Well, we were quite positively surprised that the cost per ton for the aluminum business was flat on a sequential basis, and the management has guided that this would be sustained over the next 1 year or so, since they have already locked in the carbon prices for them, and coal supplies are expected to normalize this year. So overall, I think that there would be margin expansion in Hindalco from here, and the copper business, which was impacted by a few shutdowns, the company has already restarted the operations of phosphoric acid and DAP. So the numbers are going to increase. We again are bullish on Hindalco. We have a target price of 300. Well, on the top picks, I believe Tata Steel would be our top picks in the metal sector, largely because the growth we are seeing from the acquisition of Bhushan and then the KPO expansion, the numbers look quite good.
Okay, thanks a lot, Tarang, for joining us and giving us your view. So that's an optimistic view actually coming in on a lot of the metal names post good set of numbers. Let's listen into the Tata Steel management on their plans to acquire Bhushan Steel and the way forward for the company.
In terms of the plant, it's a 5 million ton plant. It's currently operating at around 3.5 million tons. We easily see it operating at 4.5 level quite easily. Beyond 5 will call for more investments, but there is a potential to certainly take that plant from 5 million to 8 million and higher. Well, Bhushan Power, we are, as you know, the bids have not yet, we're not at a stage where the COC has told us anything.
Okay, well, let's take a short break on that note, but lots lined up on the other side. We'll track the fine print of Nestle's numbers. It was a spectacular set that they reported. A special chat lined up with Suresh Narayan on the other side.
Welcome back. So we are going through a lot of the key earnings, and one of the good numbers this season was Nestle. Our colleague Ashpreet caught up with Mr. Narayan of Nestle and started off by asking him about the trends and, of course, the projections for the new year. Take a look.
I am a great believer in the strength of the consumption economy of India. Irrespective of whatever nuances we might have as far as other elements of investment and growth is concerned, this is very strongly a consumption economy. And if I look at the overall consumption, and you would have seen yourself, Ashpreet, the results declared by other peer group companies, they've all been fairly good. So the fact of the matter is there is across the board consumption that is taking place either because of urbanization or because of convenience seeking or because of improvements in income or because of participation of greater number of women in the workforce. Whatever be the reason, there is an overall hum as far as the consumption is concerned, and I believe that this is probably likely to continue for a while. And I don't think that we will be looking at periods of particularly weak consumption. And some companies also have reported that from rural India, they've also started seeing the early green shoots of improved consumption.
Right. So then, is rural market going to be your focus as well? Is that what you're trying to say?
Look, Ashpreet, for us, we do have a rural play, but I must admit that our rural play is probably far less sensitive as compared to the urban play that we have. And for me, the urban play is especially exciting. Not just the traditional metros, but also the smaller towns, the tier 2 and tier 3 towns is where the action is. And I believe that all going well, with the increase in incomes, with increase in urbanization, and with increased aspirations in these markets, with a young consumer base, and our brands are extremely young. So to that extent, I believe that we also have some advantages in urban India.
Right, so then coming back to the GST point that you had raised, we wanted to understand as far as the profit company is concerned. There, a lot of companies have gone and said that the Consumer Welfare Fund, this much money will be parked. In fact, for instance, HUL was looking at 119 crore rupees, but in your release recently, you haven't mentioned how much money will be sent across to that fund. So could you help us understand how much is the GST hit for you?
Look, I think it is very clear. Firstly, let me state very straight on the record. The discussion that we had with the Anti-Profiteering Authority was extremely cordial, was very professional, was done in an atmosphere that was transparent. And in fact, we explained to the authorities how we had passed on the GST benefits to consumers, and on a transition period, which is there was a time between the implementation of the GST and the final changes in the packaging, in the pricing of the product, or in the grammage of the product. That interim amount was the amount where we suo moto offered the Anti-Profiteering Authority that we would
that we would like to know from them as to what to do with that sum of money. I believe the discussions went extremely well, and I think it is to the credit of the authority as well that it was a very professional conversation. They appreciated our transparency, and I believe that there will be the necessary steps taken in order to ensure that this sum is deposited in the consumer fund.
Okay, that's Nestle for you, up 25% this year at record highs. They, of course, struck gold with the Maggi hotheads. But those are some live visuals coming in from Yediyurappa, ready to be sworn in as the Chief Minister. So, as you can see, a lot of events took place last night, but eventually Yediyurappa will be sworn in as the Chief Minister. There are live visuals coming in.
Oh, yes. Interesting for Mr. Yediyurappa, of course, life comes a full circle.
Yeah.
He was the Chief Minister. BJP's first government in Karnataka had to resign over the mining issue, and that led to decimation of the BJP of course in the last election. Then you know, Mr. Modi decided to get him back in the fold and has led the BJP to what looks like you know, a positive mandate, of course falling short of the majority.
Seven,
but
very good. The seven is the magic number,
seven short of
right?
the magic number, but you know, from 35 or 36 seats to 104 obviously, and you know, can take a lot of credit for that. So swearing in at 9, though tomorrow that case will go on in Supreme Court. So it's going to be interesting. The governor has given 15 days, but let's see what happens tomorrow.
Okay, he does have 15 days to convert those 104 to 111.
I don't think so, because Supreme Court, I think, will make a decision tomorrow. I think just like in Goa, I think 2 days were given. I think that might happen, Sonia. Look, you know, the decision has to be made on the floor of the House, and that's what the case is very clear. But the Supreme Court can cut down the number of days which is given. He can't overrule the governor's decision, the Supreme Court, but can obviously cut down the number of days to prove the majority.
Okay, well, that saga continues. But let's get back to the markets, because we have about less than 10 minutes before the pre-opening rates kick in. Amit Gupta of ICICI Direct joins in now to give us some F&O cues. Amit, hi, good morning. What are the stocks that you would buy or sell this morning?
See, we are giving from the consumption theme, because if you have seen the results from Britannia and HUL, I think they are all increasing. And that is why I think the little bit laggard, the stocks which have long consolidated in this particular space, we should start looking at that in this current range-bound market. And I think Colgate is one of them, because 1100 is the level which we saw in 2015, and then it had a very deep correction. But in the last whole year, 2017, the average price of Colgate was 1100 levels. And in 2018, in just last 2 months, we saw a very significant cut in the open interest, and that was a very clear, you know, closure of short positions. The good delivery pickup we saw around 1100, and then this move started. So my sense is it has already formed a very good base at 1100, and now it's a very clear-cut breakout in the stock. In yesterday's session, there was, you know, it made a life high after a very long period, and that is why I think the move towards, you know, 1300 or beyond levels is very much likely in the stock. So the first target we are giving on immediate basis is 1280. The another one is Dower. Now in Dower also the same story. In 2015 the high was 320, and it is still around 360, 370 levels. So it is not too far from those levels. And if you look at the open interest position, I think there is a huge room for the cut in the short positions now, because the last fall from 360, it has just taken out that level. And if you see the put positions, that is the highest base at 360 now. So we are not expecting the stock to fall below that level. In fact, looking at this delivery buying which has started happening now, I think it can take the stock towards 390 or 400 now in the coming sessions. If you look at yesterday closing, it declined 3 or 4 rupees from the high levels, but that was the highest closing we saw in Dower so far. So that is my sense is these two stocks which have remained laggard in this consumption space so far, we can, you know, look at buying and have them in their portfolio.
Okay, Amit, you really like consumption, don't you? I believe you have a trade on Asian Paints as well. Is it on the long side?
That is little surprising, because if you look at the crude oil move, generally Asian Paint has the raw material of crude in it, but the paints, they are, you know, just going a very contra right now. If you look at the results were also good. So margin, the people were expecting lower, but it has come good, and that is why there is a very clear case of short covering in Asian Paints. In fact, there was almost a breakdown from 1100 just couple of months before, and that is where we saw a very high quantum of shorts being added in the stock. But finally it started moving from there, and after remaining at 1100 for many months, I think this breakout is coming in it. So on immediate basis, it is possible that it is moving towards 1390. So another 60-70 rupees of upside is there on the cards in this particular series. So looking at this momentum, we are buying the call options. So 1340 call, where the IVs were very subdued, because there were a lot of people who were writing the call options in Asian Paints against the cash holding in their portfolio. But now this is a time that when these call options have to be closed, and that is why the premiums will surge. So if somebody wants to take advantage of this, they can buy the call option, which is available near 13-14 rupees of 1340 call option. It is around 1320, 1330 still. So I think the move towards 1390 can make this strike in the money, and you will be beneficial towards the expiry.
Okay, Amit, thanks a lot for joining us and giving us those strategies. We still have about 3 more minutes for the pre-opening rates. We'll take a short break and be back. We'll also track the swearing-in ceremony of B.S. Yedurappa. Do stay tuned in.